Good morning, everyone. Welcome to the Stock Market Morning Prep video for Monday, July 6th. Hope everybody enjoyed the long Independence Day weekend in the U.S. Beautiful weather on the East Coast, and back to the markets. And sure enough, Greece in the headlines again, voting no. Markets were down pretty big, 6 o'clock on Sunday when the futures markets actually just opened in the U.S. We were well off our lows, but still down 17.5 handles in the ES. All of the indexes are down. Bonds are up, so a lot of stuff going on here. We mentioned last week and the week before that we're looking for some sort of a market top. We're talking more like a summer type top, and then look for some weakness before we get into that seasonal strength of June 27th to July 17th, somewhere around that area. Now remember, news trumps the chart, so we are getting that weakness, and now we need to see if we get some kind of positive news out in Greece where the markets can rally. So as you know, it's all about Greece, and the headlines are whipping the markets back and forth here. So very dangerous markets if you're holding positions. And that's why I say if you're long, you put a hedge on, reduce your exposure a little bit. I mean, you definitely don't want to wake up to, down 20, 30 handles. At one point, we were down 37 handles in the ES, and that really would have put a damper in your portfolio. So be careful out there if you're holding positions. I personally wait till we get some sort of a really deep correction where we can start building some long positions. But we haven't had that in 5 years. And we are looking for a correction somewhere down in September. I mean, a nice, decent-sized correction September, October. And the reason why I say that, we're coming into seasonal weakness. We have also sentiment right now is still pretty much neutral. We got to wait till we get everybody long again, and this is what I mean where we have some sort of a market, like a short-term top, before we get some strength again. And the reason why is that when markets are starting to roll over, that's when the bears will come in. They'll start dropping their short orders, and start really hitting the markets down, and then only to get hit with a railroad that the train's coming the other way, and then that's when everybody will get back long again, thinking that the markets aren't going to go down. That's when we get that big sell-off. And remember that we need that euphoric market top, meaning a capitulatory top. Market spikes up to all-time highs, and that's where I think we will come into play with some sort of a top. Until then, I honestly, with ECB doing their QE, and we have central banks around the world kind of protecting their markets, it's very, very difficult. It's unfortunate because of the fact that we have we don't have a fair and orderly markets anymore. We don't have markets that just correct itself because everybody's intervening. So very important. Another news is China. Remember China now, we mentioned, and I had been talking about this for, probably about a year or so, that China, watch China at one point in time. They're a big manipulator of their economic data, so you have to be careful with that. But you can't deny the fact when the markets are down 6-7%, they're already in corrective territory, and they are in the process of crashing. They tried to intervene last night, Sunday night, and it didn't work. The markets were down across the board. So watch China, because that's going to also affect our markets as well. So lots of stuff going on here, guys. Lots of stuff. So a lot of moving parts. Really need to pay attention to what's going on. Now let's just go into the charts. Remember, the markets will close on the 3rd. So this is as of the 2nd. Here's the spiders. We're going to open well below this. So that'll put us out below the 200-day moving average. And it's going to need to get back above it again, like it did the last time on that last Sunday's vote on Greece. So this is interesting stuff here. Now, if we continue to sell off, then I think we'll get that little sell-off that we're looking at, and then pop into some market strength before the end of the month happens. Same thing here with the diamonds. You could see here, really what it looks like is just a real nice bear flag. You could really kind of define that. Bear flag here, flagpole, and then break lower again. So, like I said, markets are a little bit in trouble. Transports here, really no denying it, guys. I mean, this is just one horrible looking chart. And we've been range bound generally since the beginning of February, so we're talking 6 months of just range bound trading, which is can't last forever. But at one point in time, we're going to have to the market's going to need to pick a side, which way it's going to be headed. And like I said, if the transports keep running lower, you have Russell moving lower as well now, starting to break down, making lower lows and lower highs. And then you have China, and then you have Greece. Got to be careful here. This a lot of stuff can happen here rather quickly. Risk off happens extremely fast. Okay, so let's just keep that in mind. Lastly, here's the cues. You can see same thing. They're all going to break below the lows of that low from last week, last Sunday, last Monday. So just kind of watch out and see where we go from here. But again, if we take that low out, the 200-day moving average is going to be the next downside target. Okay. But if we go fast, if we move fast to the downside, watch for those bounces in between, because you will get that, just to give you a heads up, okay? All right, guys, listen, be safe out there. Let's see what happens today. Possible some good news comes out of Greece, and then they reverse the markets here, okay? So just a word of caution, be careful. I wouldn't be also looking to get short here. I'd be looking to short any rallies today, if at all possible, into resistance. Have a great day. We'll speak to you tomorrow. Take care.